Welcome back, welcome back, welcome back. WWTA News, how you all doing? We're going to jump right into some information. We are here on CoinDesk as usual. We've got a story, Mantra blockchain to tokenize 1 billion of real-world assets for UAE's based property firm, DAMAC. The deal will allow token-based financing of DAMAC's wide range of portfolio companies that includes real estate development, hospitality, and data centers. Data centers. Interesting. Mantra, one-layer blockchain designed for tokenized real-world assets. Listen, Mantra was designed for tokenized real-world assets. Mantra. It's a layer 1 blockchain, right? So I'm going to assume, might be wrong, but I'm going to assume this is Ethereum-based layer 1 blockchain. Could be. I'm assuming. Could be wrong. All right. So RWA entered an agreement with the United Arab Emirates-based property conglomerate DAMAC Group to bring at least 1 billion of the firm's assets to blockchain rails. The companies announced Thursday in a press release. Now, what rails are they running on? There's the question, right? You bringing 1 billion of the firm's assets onto blockchain rails. When, why, and what rails? You did say layer 1. You did say that, but what rails? The deal will allow investors to finance DAMAC's portfolio companies spanning across various sectors, including real estate development, hospitality, and data centers. By tokenizing assets, the companies aim to streamline traditional investment processes while increasing accessibility for both retail and institutional investors. Retail and institutional investors, right? Tokenizing assets. Details of which DAMAC properties will be tokenized and specifications of the offerings will be announced in the coming weeks. A Mantra spokesperson told CoinDesk the offerings will be available starting in early 2025, the press release said. Tokenization of real-world assets, the process of converting traditional assets like real estate, commodities, funds, and securities into digital tokens that represent ownership on a blockchain, is gaining traction globally. Institutions, Ondo, that's good. Look at this. Institutional grade finance. Tokenization of real-world assets, the process of converting traditional assets like real estate, commodities, funds, and securities into digital tokens that represent ownership on a blockchain. I own, right? Here's some commodities, tokens, connect the tokens to the commodity, and then those tokens that I hold means I own those commodities. Real estate, funds, and securities into digital tokens, right? This is gaining traction globally. The institutions and even governments are increasingly exploring tokenization in pursuit of operational efficiency, gains like speedier settlements, faster transactions, and broader investor accessibility. The DRWA market could grow to trillions of dollars through this decade. Various reports from McKinsey, BCG 21 Shares, and Bernstein projected. All right, before we go any further, hold for 1 second. All right, so let's go ahead before we go any further and check this out. We're over at Mantra. All right, it says built with Mantra, bringing the world's financial ecosystem on chain. Mantra is a purpose-built RWA Layer 1 blockchain capable of adherence to real-world regulatory requirements. Our features: permissionless chain for permissioned applications. Okay. Guard module, leverage verified on-chain users and dApps. powered by DIDs for seamless identity verification across dApps within the IBC. It empowers developers and users, reduce costs and complexities for both projects and retail users alike. Launch products to an existing KYC or AML screened user base. Optimize transactions both on chain and cross chain, powered by inter-blockchain communication protocol. Get access to decentralized exchanges, yield-bearing vaults, and RWA tokenization platforms from day one. And increase trust, transparency, and security provided by Cosmos SDK. All right, what else do they have to say? World assets, decentralized IDs, continuous upgrades, on and off ramping with regulatory compliance, IBC compatibility for token movement, Cosmos Hub, right? Cosmos, you doing it. Yeah, okay. But this is, what are you running on? The gateway to Mantra Chain. Bridge and stake your, okay, complete on-chain missions. No. What exactly? Okay, it's a layer 1, so it's its own blockchain, right? But, well, I mean, who knows how fast it moves? It doesn't matter. Doesn't matter. Like, does it matter? It doesn't even matter, right? Because at this point, if you're bringing real world assets onto a blockchain like this, right? Then anybody that gets, well, it says exchanges as well, right? So this is going to allow them to bring, okay, let's go back over here. This is going to allow them to bring real world assets such as real estate, commodities, funds, and securities into digital tokens, which will then show up on exchanges, centralized exchanges, as well as decentralized exchanges, DEXs. So, hold that thought. Let's do some more research. All right, so we're over here on CoinMarketCap. And so you have Mantra by itself, right? Market cap 3.6 billion. In the last 24 hours, 74 millions moved around. It's valued at $3.79. You then have Mantra SOL, Mantra SOL Solana, Mantra Solana, right? Different decentralized exchanges. You can get it on Solana's network, right? What else? So let's go here for a second and let's look around. Let's look around. All right, so all right. So we saw that you can get this on Solana's network, but Mantra Chain seems to be its own thing. Mantra Chain seems to be its own thing. So if that's the case, and it's its own thing, right? Wow. Okay, well, look at this. So it has a market cap of 3.64 billion. All right. Trade volume in the last 24 hours, 74.41 million. There are 76,000 holders. It has a total supply of 1.8 billion tokens. There are 960 million in circulation. Okay. These are found on Binance, Uniswap, Osmosis, OKEx, BitGet, KuCoin, Gate.io, Bing. You can also find this at Bitmart, LBank, XT.com, Toko Crypto, Binance, Gate, KuCoin, LA Token, Hotcoin. Bitvavo, BTSC, BVOX, Whitebit, Biconomy, Digi, BitTrue, 2Bit, Coin, W, KSEX, Kex, I don't know. Ascended EX, Weeks, Coin X, Uniswap V2, Binance TH, Thailand maybe. And it looks like they don't have tokens in there anymore. Reserve data, okay. Tapbit, OKEX, Tossmoon, Onus Pro, Coin DCX. We're gonna go through the whole list. BitTrue, Coin One. You all can see. I'm just scanning through. It doesn't look like U.S. markets have access to this. I'm looking for exchanges, U.S. markets, right? And I don't see U.S. markets yet. Bear with me, though. We'll see. No U.S. markets yet. Nope, no U.S. markets. Nope, no U.S. markets. That's crazy. No U.S. markets. Nope. Wow. So there are no U.S. markets, right? This isn't Binance U.S. That's crazy. Now let's back up and let's do this. Okay. Yeah, this doesn't make sense. Well, it could, but it doesn't. Like, let's see how this works. Yeah, these are definitely not the same, right? It says match USD. These are, I don't even know what that is. So, yeah, I don't even know what that is. What I will tell you is that this seems to be Mantra. Let's see. Mantra. Yeah, I'm guessing this one is Mantra. There. Oh, we want this one here. This one here. All right. Yeah. It's like an all-time high of $3.80. That's crazy. So, if you look at the markets, yeah, U.S. doesn't really have access to that, so it is what it is. It is what it is. Anyways, let's get back to the story because that's the important part. Tokenized assets provide investors with a secure, transparent, and convenient way to access a wide range of investment opportunities. Amir Sajwani, managing director of DAMAC, said in a statement, Meta focuses on the Middle East region to bring a diverse range of traditional financial assets to its blockchain. Earlier this year, it said it will tokenize $500 million worth of assets of Dubai-based real estate. The developer MAG Group, the network's main net launch, took place in October, and its native token OM's market capitalization rose by nearly 200% over the past 3 months to 3.6 billion. CoinGecko data shows. OM, what is that? Let's be nosy. Well, let's be nosy, why don't we? OM. Oh, that was it. We're already there. So it's right here. It's OM. Yeah. Well, so this Middle East. So this is what the Middle East is using, right? And it's not in U.S. markets. I would then wonder what the U.S. markets are going to be using, because the Middle East is using that. They're not playing around. They're getting it done. This is what they did. 500 million so far. And so they're going to keep dumping. It goes on to say DAMAC has a history of exploring ways to use blockchain tech and cryptocurrencies. In 2022, the firm began accepting cryptocurrency payments in Bitcoin and Ether, aligning with the UAE's ambition to become a crypto hub. Sound familiar? Notably, President-elect Donald Trump said earlier this week during a press conference that DAMAC laid out plans for a $20 billion investment in data centers across several U.S. states. Now, wait a minute. If DAMAC is using Mantra they're taking that money and opening up data centers. Could we possibly see Mantra existing in the U.S.? Because as of right now, okay, you don't have to believe me. As of right now, these aren't U.S. exchanges. I'm telling you, got kicked off of these things, right? You can use Uniswap, I believe. I'm not sure about OKEx, but this is a decentralized exchange, right? And I see ETH here, USDT, Tether, USDC, Tether. These are the what you trade for, right? So in this one, there's no data available, right? And you can see on each exchange what they're trading for around. Look at this. This is a story too of its own. So on Binance here for USDT, it's trading at $3.80, right? Let's see. I don't know any of these other things. Oh, for Bitcoin, yeah. So you can swap out Bitcoin, I don't know what TRY is, USDT, USDC, Euro. You can swap out for Euro there on Bitvavo, so that's a European exchange. And I think the rest of these are just Asian exchanges of some form of fashion. All right, that's what I grasped out of that. So anyways, that's major. All right, Crypto Daybook. America's turmoil across the pond as Bitcoin defends 93,000 after $300 billion wipeout. Well, what caused that? What caused that? What is that? The total cryptocurrency industry is now under 3.2 trillion in market capitalization, as over 300 billion has been wiped out since January 6th, taking away all early gains for the year, according to the TradingView metric total. As a result, Bitcoin is now hovering above 93,000, but has been making a succession of higher lows starting from December 30th. Doesn't matter, it's up from 60K. Adding to the bearish sentiment, market is digesting the unconfirmed reports from DB News, which suggests that the U.S. government has been given the green light to liquidate as much as 69,370 Bitcoin for a total of 6.5 billion. Hey man, you guys can liquidate up to as much as 69,000. Well, how much Bitcoin do you have? From the Silk Road seizure. So you seized, right? You seized more than 69,000. We're letting you liquidate up to 69,000 Bitcoin. I don't know how much you seized from that, but we're letting you sell that much. This makes the political theater between the outgoing and incoming U.S. administrations even more intriguing, as President-elect Donald Trump, who is just a few days away from being sworn in on January 20th, vowed not to sell any of the Bitcoin held by U.S. authorities, which according to Glassnode data amounts to 187,236 Bitcoin. What? So according to Glassnode data, the United States authorities are holding, let's do the math on this. Hold on, let me get hold on. And this is not the day you're seeing this video. It's not the day I'm getting this information. So what I'm going to do is I'm going to multiply 187,236 times what is the market. At the time of this, let me go see. At the time of this, let's go back to home. Let's go back to, let's go to home. Let's go to home. All right. And at the time of this recording, Bitcoin is at 92,237.31 equals $17,270,144,975. $17,270,144,975. And that is what's held by U.S. authorities, which are the same authorities that seized Bitcoin. So did they seize this total amount of Bitcoin from the Silk Road seizure? And they were told they can liquidate only 69 or 7, roughly 70,000 of them. That's crazy, because that total gives us 17 billion, right? This gives us 17 billion. We'll let you liquidate 6.5. Is that what we're looking at? How much Bitcoin does the United States have? If this is from the Silk Road seizure, we're telling you that you can liquidate as much as that. But is that what you gain from the seizure? How much Bitcoin do you really have? That's the question. The onslaught in the crypto industry stems from an extremely high DXY index above 109, which means the value of the US dollar relative to a weighted basket of major foreign currencies. In addition, for a brief moment, the US Treasury yields were rising before retreating slightly yesterday. The benchmark for 10-year yield was as high as 4.73. Right? I'm just saying. I don't even care about that. I don't care about your yields. Well, I do, right? Because if you're holding 1 million of these and we don't know it, then of course you're holding trillions. The inflation concerns that paddle the sell-off in the broader market is picking up alongside growth expectations. London Crypto Club told CoinDesk the combination of rising growth and inflation expectations alongside rising term premia as the market struggles to digest huge treasury supplies to fund these deficits is pushing U.S. yields higher, which is dragging global yields higher, excluding China. However, turmoil is occurring across the pond in the UK, with gilt yields continuing to march higher this morning. Records were set today as the 30-year UK jumped to almost 5.45%, the highest level since 1998, while the benchmark UK 10-year challenged 4.95%, the highest since 2008. The Treasury was forced to intervene in the market to calm investors, according to reports from the Telegraph. London Crypto Club mentioned the key reasons for the turmoil. The UK is under pressure after the disastrous budget, which has increased borrowing needs with little to no position growth impact, exacerbating the negative debt GDP dynamics and driving a larger fiscal deficit. As a result, the not so great British pound falling yet again is now $1.22 against the dollar. That's actually higher than the dollar. The lowest level since November 2023, and has fallen almost 4% in the past month. Today, January 9th, is declared a mourning day in the U.S. to remember the death of former President Jimmy Carter. Therefore, the stock market will be closed. Strong jobs report. All right. So, yeah, that's okay. Right. I don't know if that so much caused the dip. Like, I don't know. I don't think them selling that caused the dip. I don't think so. I don't think them selling that caused the dip. Yeah, I don't think so. It's up in the air. I don't think so. I don't think that caused the dip. Bitcoin ETFs suffer 582 million net outflow, second highest tally ever. The ETFs bleed money as renewed U.S. inflation fears dent Fed rate cuts and boost bond market volatility. Investors withdrew substantial amounts from the U.S. listed spot Bitcoin and Ether exchange traded funds. Right. This makes sense. I think we just hit it. This is what we're looking for. Investors withdrew their money from the ETFs. The ETFs that brought in that initial money at first, the investors withdrew. I don't know why. I could imagine why. I don't know why they would have done that. I could imagine why. I don't know why. 11 Bitcoin ETFs recorded a combined net outflow of 582 million making the second largest total since these alternative investment vehicles began trading a year ago, according to data from Soso Value. The large outflow comes shy of the record withdrawal of $680 million on December 19th. Now, we know, if we go back over here, right, where are we at? There was a sell-off, right? Sell-off here of 69,000 Bitcoin. And so we go over here, and 680 million came out on the 19th. Fidelity's FBTC led the outflows, losing a record 258 million. Okay, so money left the market, and here's how. It was the ETFs. With BlackRock's IBIT bleeding 124 million, Ether ETFs bled 159 million, the largest tally since July 26th, when these public funds processed withdrawals worth of 162 million. So for some reason, they're selling out of their Bitcoin ETFs position. These large outflows coincide with renewed U.S. inflation fears, which have fueled bond market volatility, sending risk assets lower. Over the past 3 days, Bitcoin's price has plummeted. But you know what? I wonder. I'm going to speculate here, and I could be wrong, but I wonder if these people are like withdrawing that money because they're expecting a XRP ETF. If they're expecting when Donald Trump comes in office to make these particular cryptos tax-free and legal, if these people are expecting, because if let's play the advocate. If you went through BlackRock as an investor to not take on a responsibility but still have access to some liquidity, you invested in these ETFs. And then you were told that the institutional asset that all the institutions want, that is necessary to get things done, is going to be essentially, I suspect, owned and operated by the U.S., is going to be made whole and legal and tax-free. If that's going to happen in a few weeks, right? I'm kind of thinking, I don't need you to hold for me. I can come back over here and get this. I've seen the gains. Are you telling me, right, as an investor, right? I didn't get the Bitcoin investment. Ooh, I lost out as an investor. But here I am looking at XRP with all these connections that jump from 51 cents to over $2, and it hasn't fallen below $2. It's nothing but big things coming this January. So if I'm holding ETFs of Bitcoin and Ethereum, and I'm thinking what's coming in January, you think maybe I might sell off on them ETFs and prepare to go in and buy my own, I don't know, XRP, which is going to do what it do, and money going to be made? So we're looking at a hit to the market, but are we looking at a hit to the market for real? You know, I'm speculating. I could be wrong, but I'm just saying, if that was me and I saw that these other assets were about to be made legal and I could hold them and get the value out of them, I'm going straight to that because it's in my hands. All right. Last story, and we're going to close this one out. Solana pushes validators to test early Firedancer upgrades. So Solana's making some upgrades. The upgrade from Jump Crypto could drastically boost transaction throughput, helping Solana support legacy financial markets. Solana is ratcheting up testing of Firedancer, the highly anticipated software upgrade that promises to vastly increase the blockchain's processing speed. By the end of this week, Solana's core developers want a supermajority of processing power on the chain's low-stakes test network to run through Firedancer, an early version of Firedancer, according to messages in Solana's technical Discord server. The call to action to Solana's validators, those who run computers that power the network, marks Firedancer's biggest test yet. The upgrade has been in the works since 2022, when the chain frequently faltered, and is seen as a boost of Solana's stability and speed. Firedancer's proponents believe the software developed by the crypto arm of trading giant Jump will give Solana an unbeatable edge in crypto's race to ward global financial markets to blockchains. To woo? What? They point to its theoretical speed, 1 million transactions per second, orders of magnitude faster than any blockchain-based system today. So they're saying they can do that. I don't hold Solana. They're saying they can do that. I don't know. Firedancer itself doesn't yet have a launch date. For now, Jump Crypto has only launched Freakendancer, which is a hybrid combining element from Firedancer and Solana's predominant client architecture. Only a small subset of validators had adopted Freakendancer before this week. Many told CoinDesk they found it buggy and prone to crashes, which is common with Solana. It's been notoriously difficult to keep that thing alive and running, but we've done it, said Colin House, a longtime member of Solana's validator community. He sees a new push for broader Freakendance adoption as a sign of the software's maturity. If you have confidence to say, hey, we want 60% of testnet to run this client, then we're getting there, House said. Crypto networks like Solana are powered by hundreds of individual validators. Each independently runs a computer loaded with client software that connects them to the network. Such decentralization helps blockchains stay secure, and it makes system upgrades much harder to coordinate. For years now, the Solana Foundation, a nonprofit that stewards the network, has partially addressed the coordination dilemma via subsidies. Its delegation program helps smaller validators, those who don't have much staked SOL, and therefore can earn less revenue for the week. Validate Solana subsidiary. All right. So Solana's got something new coming out. It wasn't working. It was buggy as I don't know what, as is anything on Solana, but after a while, Solana will prove itself. So will we see Solana's value going up in the near future? I don't know. All the same, that's all the news I got. I'll catch y'all on the next one.